Good morning. This is the video newsletter for Buy Sell Short for Sunday, October 16th. Market continues to rally nicely off the bottom we saw a week ago. This is pretty much where many shorts went all in, and they're starting to throw the towel in. One thing you'll notice over this rally that we've had over the last 2 weeks is the lack of really big down days, and that's the first time we've seen this happen, really since the T-bagger sell-off began back in July. As you can see, the market, if you were to go back, and let's actually take a quick look at last year, this is what we should be looking forward to over the next few months if we follow the path that we had last year. Once we've gotten out of this big up-down trend that we've been stuck in over the last 3 months, essentially the market this time last year just climbed the wall of worry. No one believed the rally. We just kept going up, 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 up. We had some down days, but those down days weren't, of the nature of 200, 300, 400-point days. And now that Europe finally seems to be sort of pushed out of the headlines, kind of, and the issue coming at least to a resolution for now, essentially to kick the can down the road, which is exactly what we wanted. Remember, you've got a lot of bears, a lot of shorts out there saying that this market is going to sell off, and they're thinking and trading the way they've traded over the last 3 months. And when markets go into bearish moves like we've seen over the last several months, people who've traded that way refuse to get out of that mindset, and that's essentially what powers the market back to new highs. We've got a target right now of the 200-day moving average that is up there at 12,000. RSI is slowly breaking up. We've got stochastics over the 80 level, and really, since the market started this sell-off back in the May timeframe, April-May timeframe, we really haven't seen stochastics trade for any period of time over the 80 level, and that was common throughout 2009 and in the late year rally from 2010. So that is what I would be looking for going into the year end. Here is the 15-minute chart. You can see we are up, over 1,000 points over the last week or so. That is an 11% move. Now, there are some that are making the argument that in an 11% 2-week move in the major indices is something you see typically in bear markets. And I would agree with that to a point. I would also throw that caveat out there that, we had a couple of big events conspire to take this market down. We had the debt ceiling nonsense coupled with, the continued hyping of the issues in Europe, and both of those things served to take us down. So now that those two idiotic things have sort of gotten pushed to the sidelines, I would say that the market we saw since July was an outlier, and we are still in a bull market move. And that's going to continue to be my stance. SMH continues to break out. It's about to touch that 200-day moving average up there at 31. We're up, 15% on this play over the last week. Cannot argue with that. I would be waiting for a pullback if one came back to that 8-day moving average, $29, before I would add to this position at all. Now, one thing to keep in mind as well that helped the market on Friday, retail sales 1.1%, much stronger than expected. And again, I will go back to my argument that the debt ceiling stupidity that we saw in August was the big reason we saw such a pullback in spending, etc., etc. You just had a lot of businesses, a lot of people worried about the brinksmanship that the teabaggers essentially wanted to burn down the country just to prove a point. And you had businesses not making purchases, consumers not making purchases. That stupidity is past, and now we've got all that pent-up demand starting to hit the economy. And, for those people saying we're in a bear market and that, this is just merely a bounce off oversold levels and that, we're going to continue going back down because unemployment is 9.5%, let me remind you that unemployment has been sky high for the last 2 years and the stock market has gone up massively. Companies have cut down so much that even in this mediocre economy, they're still able to spit out fat profits. Look at Google on Friday. Companies are making lots of money. The market is priced very, very cheaply. We can still have crappy employment numbers and see this market run to new highs. So don't fall for that stupidity you hear from the shorts and bears, and that's pretty much all I'm going to say on that matter. Let's jump into some stock plays. Gone Thursday and Friday. Didn't matter. As I've been saying for the last 2 weeks, this market has changed and changed for the better, which is why we started swinging positions a hell of a lot earlier than everyone else, just like we do and have done at every single market bottom over the last 10 years. So, again, didn't even need to be there. Didn't need to babysit our positions. They all have done very, very well over the last couple of days, and we have some fantastic setups going on right now. ANX, cash-rich biotech, trading almost 60% under cash. 103 will light it up. We've got I've got this circled here. This is where I think we're going to see ANX get a big spike to. Hopefully this week would be very nice. We've got RSI about to break the 50 level. Stochastics pushing up to the 80 level. Trading under cash. Big time. Nice setup on the chart. Boom, boom is a coming here. CYTR, again, $45 million in cash. We had a couple of very high volume days, and then the stock got painted into the close. We've got some funds getting out of this one, which is great. This is a stock, given a little bit of patience, that I have no doubt we won't see the 50+ cent area on it, and probably even higher. I mean, we've got a biotech stock trading at cash value. I can't tell you how many times over the last decade during market bottoms where we have bought stocks trading at or below their cash, sat on them, and just banked. And this should be no different than all those other times, especially with these under $1 stocks starting to blow up left and right. Our recent example, CYCC. 2 weeks ago, we were buying this one 38 to 40 cents. We were looking for a move back to the 20-day exponential. Was at 55 cents when we got on there. We got some nice news on this one, and it went boom on Thursday and Friday, 60 cents. 50% gain over the last 2 weeks. See how quickly these stocks can blow up? I mean, look at this chart. This is a nice bottomed out, oversold chart. No delisting worries for at least 6 months until April of next year. No dilution worries. They already did all their dilution. They've got lots of cash. You know, the right amount of volume, and off to the races we go. Now, on Thursday, this one broke that 34 level, was threatening 35 to break out, and then they painted it into the close. And then on Friday, we had probably some traders who jumped in on a 34 break, 35, 34 and a half on Thursday, didn't see the breakout, and sold, and that's why we found ourselves back here. I've gone to a full position on this one. I think this one's going to reward us very, very nicely very soon. Speaking of that, NSPH. This is one we've been sitting in for the last week or so, waiting for the breakout. Again, another biotech stock trading way under cash value. Got hammered going into the quarter end, and now we finally got our breakout on volume on Friday. We got to break through the 20-day exponential. Right now, we've got the 50-day moving average at 127 calling us, and this is a stock that can easily hit this week, and this is going to probably end up being another 25, 30, 40% winner for us. RSI breaking 50, Stochastics breaking 50, and again, this is just another one of these swing positions. We can just ride it and see how high it goes, and the chart looks really, really good going into the market this week. Our other cash-rich play, TNGN, about as oversold on every indicator there is. RSI, way under 30. Check out Stochastics for the last 3 months. All the idiot funds who are going to sell out of this stock have pretty much sold out of it at this stage. This stock was $1.60. Actually, you know what? Let's even just go. This stock was trading in the $1.20 to $1.40 range all throughout the summer, June, July, August. Then we had the teabagger market sell-off, and now the stock is down 75% and under cash. Another one I'm looking to accumulate. Target is the 20-day 56, and then up there at the 60-cent level. No reason why this one cannot do the exact same thing we've seen on CYCC. Just a matter of patience. WEST, we've seen a lot of the solar stocks bounce over the last couple of days. We had some very nice action on West on Friday, a breakthrough 80 cents, and we could quickly see him move up there to the 95 $1 area. Again, nice beaten down play. If you read their earnings report from July, right now they are hitting their sweet spots for sales. They expect sales to go up 50% this quarter. We played this one the same way last year and got a massive gain out of it, and the setup here looks similar to there. OPWV, jumped into this one, $1.60 on Wednesday before I left. We got a sell-off on that one, which gave a nice opportunity to add at $1.50. We still have this symmetrical triangle. I think we're going to go boom this week. RSI about to break 50. That positive MACD cross that I mentioned when we jumped into this one on Wednesday is about to trigger tomorrow. The last time we had a similar trigger, and, you know, remember, when we played this stock in August, it did the exact same thing. We bought it, it dipped, you know, was bouncing around for a couple of days, and then when boom, ran 35, 40%, I believe. We went from $1.30 to $1.96. Similar thing here. We're about to get a positive MACD cross. Just like we did, like then, stochastics are breaking the 50 level, so I'm thinking this one's going to go boom very, very soon. DYNT, you know, what can I say about this one? This is a perfect setup on a rallying market, a rebounding market after a stupid sell-off. This stock got hammered into quarter end with the market dropping, you know, almost 40%. They make money. They're profitable. You can't ask for anything else, especially on a big sell-off. Back to the 20-day exponential and back to 1 is what we're looking at. And check this out. We're about to get a positive MACD cross. We've got stochastics in the basement. Again, any dips on this one, I would be looking to add. If volume was higher, I'd actually go to an even larger position on this one because I think the upside is very, very nice with minimal downside going into this market. HIMX, over the last month, trading in this nice little rectangle formation. Breakout 112 is probably what will set it free. 112, 114, and again, 50-day moving average calling at 128. $7 stops on it. Minimal downside, very nice upside. You're going to start to see traders running their scans, looking for all these plays that have bottomed out, and these are the plays typically at this stage of the market. This is the kind of stock you just see go boom, you know, 25% gain in a day on some anything, you know, whether it be news or anything. Stochastics coming out of the basement, like the setup. Definitely one to keep a small position on. You can pressure bet on a break through the 20-day exponential at 114. IPAS, again, another stock decimated with the market. Minimal downside. One we've played many, many times in the past. You know, we've got at least 10% upside on this one, I think, once volume starts to come back into the stock. Gamer stocks on fire over the last few days. COOL, GLUU. Here we have Mad Cats, you know, one we haven't mentioned in quite a while, trading around the bottom. Remember, they are the exclusive branded headset for the Xbox, going back to that deal they announced earlier this year. Xbox had news out. They've sold 440,000 Xboxes in September. Xbox continues to dominate. Gamers are doing really, really well. We've got the Zenenga IPO hype starting to warm up. Breakout 70 cents, you know, and again, this is a stock every year at this time it does very, very well. Christmas play, Xbox play, chart play, RSI about to break 50, stochastics, you know, in a nice little uptrend, minimal downside, and if we get enough volume and enough traders looking for plays under $1, could give a very nice move up to that 90-cent plus area. Last but not least, FCEL fuel cell, been coiling over the last couple of days. I'm thinking we're going to see 110 to 120 on this one. RSI trying to break 50. Stochastics up there in the 80 level. The peers of fuel cell have started to run, and there is no reason at all this one will not join them. So we've got some very, very nice setups going into this week, and again, swing is back. And you know, it has been a long time since we've been able to swing stocks with any sort of comfort level. Dips continue to get bought in this market. plays that we jump into. If they dip, we can add to our position. So, we're actually entering a market where we can have two positions. We can have our swing position, and we can pick up scalp positions whenever our plays dip, and feel pretty confident that they are going to bounce back. And that is the first time we have seen that really since the April time frame, and that is very, very bullish for the market near term. So that is it for the video. I will see you guys in the chat room tomorrow. Goodbye.